Hello viewers, we'll be going over gold futures and silver futures. In this video, we'll be going over the day-by-day probability model, the technical performance, how we find the models, and the day-by-day forecast for gold and silver. So back to the technical analysis, we'll be going over gold futures first. Today we're up 2.3% on the 1 hour chart. We are nearing overbought RSI, and as for the 1 hour MACD, we're currently on positive MACD. For the 4 hour chart, we start to see a convergence in play. We still see a negative MACD. I do see us approaching to positive MACD very soon. If we expand out further to the daily chart, we made a nice reversal between on March 24th. We saw a convergence and now we're on positive MACD. As long as we remain around support level, around the 50-day moving average, this yellow line. If we don't break that support level, we may see a continuation of this uptrend for gold. So I do see that as our first immediate support, which is around the price of $1,585. And as for resistance, if we do manage to climb higher, the next resistance that I see was marked back in February 24th, as well as March 9th, and same as March 24th. There's resistance around the price of $1,673. So if we were to move up higher, that price movement is roughly around, I would say, 3% to the upside to hit back to previous resistance, and to hit back to support on the 50-day moving average is around 2.8% to the downside. So let's head back to the day-by-day probability model. So as the days progress, we have a 17% chance for gold miners to climb higher between 0 and 1.6%. And we have a 33% chance for gold miners to climb higher between 1.6 to 3.2%. And on the other hand, if we were to move down lower, we have a 33% chance for gold miners to fall between 0 and negative 1.6%, and a 17% chance for gold miners to fall between negative 1.6% to negative 3.2%. So let's head back to the day-by-day probability model, or day-by-day forecast for gold miners, or I should say gold futures. And we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. Right here, we start off with touching the upper Bollinger Band, and then we proceeded to touch the bottom Bollinger Band. And then we saw a reversion to the mean on the current trend. And the trend in question, this trend dates back to March 6, 2017 to May 28, 2017. We also see that we touched the upper Bollinger Bands. After that, we touched the bottom Bollinger Band, and then we revert back to the middle Bollinger Band. So the trend that we just examined was March 6, 2017 to May 28, 2017. Back then, gold miners was, or gold futures was up 2%. And if we head back to the day-by-day probability model, that coincides with the standard deviation of 33%. And if we examine closer at the technical performance, if we examine the current trend, we're down 3% from monthly high, up 9% from monthly low, up 1% from 10 simple moving average, up 2% from 20 simple moving average, and up 1.6% from 50 simple moving average. And if we compare that to the trend that we just examined, it was down 1.9% from monthly high, up 5.4% from monthly low, up 1% from 10 simple moving average, and we are up 2% from 20 simple moving average, and 1% from 50 simple moving average. It is quite similar to technical performance, what we see here on the current trend and the trend in question that we just examined. And let's examine silver futures. So back to the technical analysis. Silver is currently up 4.2% On the 1 hour chart, we're currently overbought on the 1 hour RSI. We're currently on positive MACD. As for the 4 hour chart, we are slowly approaching to overbought RSI, and right now we're currently on positive MACD. On the daily chart, we saw a nice reversal in play as long as we average above the 9 moving average and continue to make higher highs. So if we do reverse, at the moment we do see a convergence of the 9-day moving average, this blue line, converging onto the 18-day moving average, this purple line. As long as we do manage to break previous highs, this trend may reverse and head on higher. We saw a convergence back in March 26, so one could say silver may climb higher in the next coming days. So for support, the next support that I see will be where we made a temporary resistance around between March 23rd and March 24th at around a price of $13.30. That is our next support. And as for resistance, we had a resistance back on March 16th, and that is around a price of $15.10. So if we do manage to climb higher, that price movement is roughly around 4% to the upside, and to the downside it is around 8.7% to hit back to support. So let's head back to the day-by-day probability model. Again, this model is now available in the link below, so do check it out. So on the 7th day, we have a 29% chance for silver to climb higher between 0 and 7.5%. And we also have a 7% chance for silver to climb higher between 7.5% to 15% on the extreme case. And to the downside, we have a 57% chance for silver to fall between 0 and negative 7%, and a 7% for silver to fall lower between negative 7.5% to negative 15%. So let's examine the day-by-day forecast for silver. So as the days progress, so we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. Right here we have the current trend, and we start off at the bottom Bollinger Band. Next we touch the upper Bollinger Band, and we touch the bottom Bollinger Band twice, and then revert back to the mean to the middle Bollinger Band. And in the trend in question, this trend dates back to August 5th, 2011 to October 14th, 2011. So we start off touching bottom Bollinger Band, upper Bollinger Band twice already, bottom Bollinger Band, and revert back to the mean. So what we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there is reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was August 5th, 2011 to October 14th, 2011. Back then, silver fell around 2.2%. So we may see sideways price action in the next coming days. So that coincides with this standard deviation between 0 and negative 7.5% with a 57% chance of hitting this standard deviation. And if we examine closer at the technical performance on the current trend, we are down 30% for a monthly high, up 20% from monthly low, up 2% from 10 simple moving average, up 4.6% from 20 simple moving average, and down 10% from 50 simple moving average. And now if we compare that to the trend that we just examined, it is down 36% from monthly high, up 7% from monthly low, up 2% from 10 simple moving average, up 2.8% from 20 simple moving average, and down 14% from 50 simple moving average. So there is a quite similar pattern in the technical performance as it is in the current trend. So do take that in consideration. And again, this model is now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.